What's good, folks? Welcome to episode 3 and week 3 of managing my 8K gold funded account. Guys, I need to be very sincere and blunt here. Sometimes trading will make you feel very bad. Trading will make you lose it. Trading can scatter your emotion. Trading can scatter your psychology and make you want to run mad. This is because there are lots of emotions attached to trading, because it is something that is very important to our individual activities. Some people put all effort, put all resources in trading in order to make ends meet. And when you do all of this, your expectation is very high and huge. And just like most of us, those expectations never come true. You struggle, you grind, you work 9 to 5, you buy accounts to fund your accounts, you blow them up, you go back to square one. You understand what I'm trying to say, because I know you watching this video, you were there, or you are still there, or you are coming there. Trading is not easy. Trading is not easy. Me trying to manage this 8K account, I know how hard it is for me. When I bought this account, I had high hopes that I was going to crush the account, I was going to pass the account. But this is week 3. I'm deeply in drawdown. My account is bleeding. Losses upon losses, losses upon losses. You do the right thing. You use your strategy. You use all the necessary tools you are supposed to use. But the market does not care. The market don't know what you are using. The market does not want to know who you are. The market will do what it wants to do. When we open our MT5, when we open our trading view to trade, the first thing that comes to our mind, or the first thing that should come to our mind, is that we need to respect the market. The market has a final decision to make. So if we can respect the market and follow the market through, I think we are going to be good. If not, the market is going to beat you up and down. The market is going to beat you because it has the game. It has the rules to the game. It has the templates. You are just a spectator. You are just coming into the market. So the market is not going to respect you. The market is not going to care about you. The market will do what it needs to do. So that is why you need to respect the market. I just want to let my emotions out. I just want to let my feelings out. And this is how I felt this week. This week was, I don't need to lie, this week was not really good for me. This is week 3 and episode 3 of trading the 8K account. So this week, I took about 2 trades, 2 of them losses. And if you can remember, last week, I told you I was holding a trade on Euro AUD. Unfortunately, that trade hit stop loss. And if you may recall, I told you the trade went up to $120 in profit, $100 and something in profit, and it reversed. I was thinking maybe after the reversal, the market is going to continue and hit my take profit, but that didn't occur. Rather, stop loss was hit. So apart from that, I took additional trade this week. I took NZD-JPY trade, which I closed the trade because after 4 days, the market was consolidating. It was just consolidating within my entry point. I was fed up and I closed the trade. And that trade hit stop loss. So if I didn't close it, I closed the trade at about $50 loss because I held it overnight. So GFT charged me swap and some commissions, so everything total was about $50. So if I didn't close that trade halfway, I could have lost a full 1% of my account. So closing the trade was a good thing for me. It was a good thing because after 4 days, price didn't move. There was no need holding the trade, so I just need to scratch. The other trade was silver. I took that trade on the 15 minutes. Immediately that trade hit stop loss. So that trade didn't waste my time at all. I liked the way it played out. Hit my stop loss or hit my take profit, either ways. And also I took a trade on, was it BTC? I took a trade on BTC. It was a limit order. So setting the trade after the limit order, I don't know what happened. I thought the trade has already started running because I was monitoring it on my trading view. And after the trade hit stop loss on trading view, I went back to check the trade and I discovered the trade did not register. So I was curious to know why the trade didn't register. So I went to my orders and I found out that the trade was rejected. I don't know if it was because of network issue or MT5 issues, but it was a good thing for me because that would have made me lose some money. But as it was rejected, oh good. So that was a good one. So that is just the trade I took this week. 2 trades, 2 hits, stop loss. So what I'm going to do now is I'm going to take you to the chart. First, we are going to go to my Notion journal. My Notion journal, we are going to go to Trading View and we're going to review the trade together. Stay tuned. After the intro, we'll be there in the chart. Okay, welcome to my Notion journal. If you can see, this is the trade I took. This is the first trade. I don't know if you can see it. Let me open it here. This is the first trade, NZD-JPY. It was a very setup. As you can see, these are the 3 screenshots I took. Let me open them so that you will see. You can see a very clean chart. Expected bearishness because we are having respect of this fair value gap, and this fair value gap is trying to hold. So I was expecting that price is going to continue to the downside. So that's why I was shorting NZD JPY. So the second screenshot. So this is the second screenshot on the 1 hour time frame. Price has tapped into the daily fair value gap, and we are seeing a 1 hour impulse shift, creation of a fair value gap. Price is testing the consequent encroachment of that fair value gap, and that is where I sold. You can see price started to give me some couple of hope, and you know what happened already. So this is the last screenshot. Let it load. Okay, this is a screenshot. This is after several days. You can see how messy the price action is. So this is where I closed the trade about $50, and the trade finally hit stop loss. So just take your time, go through. You can see this is the note. Outcome is loss. P&L minus 50. Rules followed. I followed my rules and I lost the trade. So I won't beat myself for that. So this is the details about the NZD JPY trade. So let's go to the silver trade. So this is the silver trade. It was a bullish setup, and this is the trade screenshot I took. The trade was taken on the 26th of August. So let's open the first screenshot and see. So this is the first screenshot. You can see what I was expecting. Price respected this daily fair value gap, and we are creating another fair value gap off of that fair value gap. So I was expecting continuation to target this swing high or buy side liquidity. You can see that this current fair value gap is holding, reason why I took the trade. The next setup was on 1 hour time frame. After we tested that daily fair value gap, we had an impulse shift on the 1 hour time frame. You can see the creation of fair value gap. Price retested it. We are seeing this rejection, and I took the trade. So let's review the last screenshot. So this is the last screenshot where I took the trade. I zeroed down to the 5 minutes time frame to look for a better entry. I took the trade on the 5 minutes time frame, and eventually it hit stop loss. So this is a trade I took on NZD JPY and silver. You can see the details for this silver trade. 5 minutes fair value gap, London. Note, outcome was loss. P&L minus $41. Rules, I followed my rules. So this is my Notion review for this week. So we are going to my trading view to see the reasons why I took these trades. So the trading view, let's first check the NZD JPY from the daily time frame. Okay, this is the daily time frame. First look, you can see that the trade eventually hits stop loss, and the price is currently moving to the upside, right? So this, let me quickly delete this entry, this thing here, and we're going to look into the trade proper. So you can see we had this daily fair value gap, right? Price came into it on this candle, rejected, it is respecting it. This was on Friday. The next week, on Monday, price swept the high of Friday and closed below the week, right? On Tuesday, price has already shown intention to reverse on Monday. So on Tuesday, I was just expecting continuation to the downside, right? But we created this indecision candle, and that is where price started to range, right? Because we are already respecting this daily fair value gap, I went down to my 1 hour time frame to look for a corresponding fair value gap to trade. So I went down to the 1 hour time frame. So on getting to the 1 hour time frame, you can see after we rated the Friday high, right, price created an impulse shift, 1 hour impulse shift, and you can see price came into it and rejected, right? This is not where I took my trade. After that, we created another order flow leg with a fair value gap on the 1 hour time frame. This is exactly where I took my trade, right? My stop was above this level and I was targeting this swing low, right, for price to come down. But as you can see, price started to range for about 4 days and eventually we hit our stop loss above this level. So this is how I lost the NZD-JPY trade, right? So let's go to the silver trade and let's review it. So this is the silver trade. So silver has been bullish. If you look closely, we are respecting discounts. We are respecting discount arrays, right? We are respecting discount arrays and creating new highs in the market. After we respected this daily fair value gap, we created another daily fair value gap that price traded into, right? After that, you can see that price is running higher. This is where I took my trade, actually, this daily fair value gap. But as you can see, I lost the trade. So let me show you why I lost the trade. So this is the daily fair value gap. So what you're supposed to do is to go down to the 1 hour time frame to look for an impulse shift. 1 hour time frame is the correct time frame alignment for the daily. So we'll go to the 1 hour time frame to look for a 1 hour fair value gap inside the daily fair value gap. And I don't think I need to highlight it. You can see it. It is very, very obvious. It is very, very obvious. So after we traded down to that fair value gap, we had an impulse shift, right, on this bullish candle here. Sorry for that. On this bullish candle, and we created a 1 hour fair value gap. We created a 1 hour fair value gap. After we created this 1 hour fair value gap, sorry for the mess. After we created this 1 hour fair value gap, I dropped down to the 5 minutes time frame because I wanted to get a more cleaner entry. After that, I went, sorry, let me get that area let me be precise and get that area. Oh, where was that? I think, yes, it was here. So after we traded into that fair value gap and price came to the 1 hour fair value gap, we had this impulse shift, right, on the 5 minutes time frame. Remember, the 5 minutes time frame is the correct alignment for the 1 hour, while the 1 hour is the correct alignment for the daily, right? So this is the 5 minutes time frame and we had an impulse shift, right? I took my trade around this level, right? I put my stop loss here and as you can see, it wasn't up to an hour and price just came down and take the stop. Now, let me show you something. No matter where I put my stop on this trade, it will still be a losing trade, right? Because you can see that price made a deeper retracement. This was the 1 hour impulse shift, and you see that price came below it, right? Swept this low and reversed. Now the target is hit. This is the swing high I was talking about, and price has met that target. The draw on liquidity is hit, and I lost the trade. So this is the trade I took this week, and we have gone through them, reviewed them. Like I said, I'm very deep in drawdown. So what I'm going to do is I'm just going to calm down, use this weekend to look through my statistics, look through my strategy and see what I can refine and tweak some things. Although I'm not going to do much tweaking on my strategy, what I'm just going to do is the risk management I have for this account. Maybe I'm just going to reduce the risk from risking 1%. Maybe I should be risking 0.5% now until I get the account to somewhere better. Then I'll start risking 1%. Because if I risk 1% now, maybe blowing the account is going to be very, very quick and easy. What I'm going to do is I will start risking 0.5% on that account until I see a good result. Guys, please, if you know you have not subscribed to my YouTube channel, please, I take God beg you, help me subscribe, like the video, comment, so that the YouTube algorithm will help recommend this video I'm putting out in this channel to a wider audience, and also help my channel grow. Thank you, and see you in the next episode.